Hello, welcome. Thank you for tuning in. If this is your first time, please consider subscribing. We're trying to build a community of people who are interested in learning a little bit more about their insurance in their superannuation. But if you are a returning viewer, welcome back. I really appreciate your company and your support. Today, we're going to talk about a little bit of an extension to a video that I posted almost a month ago now, which was about the four types of insurance cover you can access through your superannuation. However, I wanted to extend that topic and actually talk about how those four types of insurance cover interact inside your super. Hopefully, you can get some value out of this. I have, as usual, put together a very short whiteboard video, which has become really popular based on colleague feedback. So stay tuned. Let's have a watch, and then I'll round up again at the end of the video and summarize. Today we're going to expand on the four types of insurance cover which are generally offered within superannuation and what benefits they'll provide you. People generally interchange the use of insurance cover against insurance benefits. Cover is the amount you're getting to protect your life or well-being, whilst benefit is the actual monies you're receiving from successfully claiming against your insurance cover. Don't worry, by the time we end this tutorial, the 4 equals 2 will make a little more sense. You might recall from a video I posted a month ago about the different types of insurance cover. Just to recap, there's death cover, which is the more widely available type of cover. Terminal illness cover, which you'll generally get automatically without additional cost as long as you have death cover. Total and permanent disablement cover, and for the rest of the video we will refer to this as TPD cover, and total but temporary disablement cover, more commonly referred to as income protection cover. These are the only types of insurance cover you can access within superannuation, and not all funds provide income protection cover as a default, mainly because some employers do provide these for their employees outside of super. Let's focus on the first two types of cover on the left-hand column of the matrix: death and terminal illness cover. Death cover in particular is a difficult conversation to have. Some funds even have changed their disclosure documents to refer to this type of cover as life cover, just to make it a little less confronting. However, in my view, there's no need to sugarcoat the event. We're all heading there. It's just a matter of when. Terminal illness is an add-on benefit to death cover, where the date is known and likely to be determined by a specialist. Death cover is when the time of your death, like most of us, is unknown. And terminal illness is the cover when you have been certified by 2 medical practitioners, one being a specialist in the field of your claimed condition, is likely to die within 12 months. It's important to note that other funds have a more generous definition of 24 months, which is consistent with the SIS regulation and definition on terminal medical condition. These are both lump sum payments paid to your super account once your claim is admitted by the insurer. The other two types of cover on the right-hand column are related to disablement because of an injury or illness. That's TPD and income protection. The key difference between TPD and income protection is that TPD is more severe and permanent in nature, whilst income protection is generally not permanent, or at least that's what SIS regulation requires. Back in 2014, all insurance policies were supposed to be adjusted to ensure they are aligned with SIS definition of permanent incapacity and temporary incapacity. Another important point of clarification is the interaction between death, TPD, and terminal illness. These benefits are linked together as part of the same insured cover amount. In other words, a terminal illness or TPD benefit, if admitted, is simply an advanced payment of death cover. That's why there are some additional rules applicable to the formulation of TPD cover amount. For example, if your death cover amount is higher than your TPD cover amount, some funds allow for the difference to be paid in the event of your death. TPD cover generally cannot be higher than your death cover amount. Terminal illness is an add-on benefit. If you have death cover, you'll automatically be covered for terminal illness without any additional cost. There are 3 types of cover 3 ways to access insurance, 3 insurable events, but only 1 benefit payable. Just to be clear, if you are admitted and paid a TPD benefit, your death and terminal illness cover will cease. Using this example, you will not get another $500,000 when you subsequently die after receiving your TPD benefit. Lump sum payments do not attract any offsets unless you obtain cover automatically through transfer terms or takeover terms and have not forgone a previous amount of cover with the previous insurer. And finally, monthly income insurance benefits. If you were admitted for income protection, then your insurance benefit will be paid monthly in arrears. It is generally based on 75% of your salary. If your SG contribution is also insured, then that part of the monthly benefit payment will be paid to your super account, and only the 75% will be payable directly to you. If you're on a high income threshold, then often the 75% of salary is capped at a maximum benefit limit, which is generally set by the reinsurers. At the time of airing this tutorial, the maximum benefit can range anywhere from $25,000 per month to about $30,000 per month. And one last thing to take note of, some funds actually cease income protection benefits on admission of TPD. You'll need to be aware of this, as this generally translates to cheaper premium. Okay, hopefully that has helped explain a little bit the difference between your death and total and permanent disablement cover and terminal illness cover, which are your lump sum payout benefits that you can access through your super. And the other type is your income protection benefit, which is an income replacement benefit when you're temporarily unable to return to work. Thank you so much for watching. I hope I've added value to your day today. And if you did find this useful, please consider subscribing or clicking like as well, or both, and possibly share it with some of your colleagues and your friends if you think it might also make a difference to their understanding of insurance inside super. Hope to see you in the next video.